All right. Well, thank you, everyone. Appreciate the time. So a little bit about my background. I've been in the investment space for my whole career, both on the public side and on the private side. My co-founder, Adam Castlebaum, is on the sales and marketing side. So he's been the sales manager for the Canadian territory at a manufacturing sales firm. And we've actually known each other for the last 25 years. We first met in kindergarten and have been good friends ever since. And we started Optionality late last summer of 2020. And the problem that we saw over and over again is that people are using the stock market and using the options market as a source of entertainment, but without the proper tools. So we know that for options, there's a very high barrier to entry to A, fully understand all of the associated risks, and B, to properly structure a trade that resonates with the user's risk tolerance. And Optionality is the solution to that. So we are bridging the information gap specifically for new and beginning traders so that they can utilize a more sophisticated and proper trade structure without needing the knowledge of how to go into an options chain and put on the trade themselves. We're allowing access to trading strategies that were previously reserved for the elite or for the professional trader. And we are an option-specific trading platform that's introducing an algorithm that translates the options chain into a menu where users have the ability to compare and shop our preformed spreads. We're also bringing a social aspect to trading, so allowing users to form groups somewhat similar to a fantasy sports league, where they can compare performance, compare trades, and message each other all in our app. And it's important to understand, because we're using a standardized algorithm to accomplish this, we avoid taking any advisory or any fiduciary liability. So imagine you're on our app and you want to trade Apple. You'll see 9 different potential spreads organized by risk level: low risk, medium risk, and high risk, with all the parameters clearly stated pre-trade. That's a totally different experience than you would get on a traditional brokerage service, where you have to manually enter each variable, and then you'd only see some of the important metrics of just that one trade. We're building a high engagement, high enjoyment platform with the focus on simplification, not gamification. And our target market falls right in the $3 to $5 billion range. And we estimated that using both the top-down approach that focuses on new account openings, as well as a bottoms-up approach that funnels up from the total transaction pool of our target demographic. And in terms of our competitive landscape, we like to think about our blue ocean as the only easy-to-use platform that's dedicated solely to options trading. But the exciting thing here is that our process is so simple and so streamlined that our value add reaches any beginning trader, not just those looking to trade options. In addition to being in that blue ocean, we're further differentiating ourselves from the current landscape in a number of ways. Our preformed spreads are something that nobody else is doing right now. And that's what allows us to create the simplicity and create the look and feel of a sports betting experience. And it also allows us to rank the relative risk of each trade so that users can easily identify the appropriate trades for them. And we take user protection extremely seriously. So we don't offer margin and we don't offer unlimited loss trading. Our in-app chat and social allows users to both privately and publicly compete and communicate with one another, creating a sense of community that drives organic engagement and organic retention.
And we do feel that this is a user acquisition play. So we want to make sure that we're leveraging trading focused channels like YouTube through micro and nano influencers, Facebook with groups like Options 101, and trading specific podcasts like Options Bootcamp, where these online communities have already formed, kind of out of necessity, because this isn't a confusing and intimidating space. From a digital spend perspective, we've identified 2 marketing firms that we'd like to work with to drive a higher level of visibility and brand awareness, but more importantly, make sure that our content identifies with our target demographics so we can help establish brand trust. The referral codes, sign-up incentives, site credit, and referral friend programs will take a lot of the campaigns you've seen in the sports betting sphere and bring them over to the trading sphere as well to help drive that user acquisition, as we do consider an active trader on Optionality as 8 trades per month. Through multiple rounds of our MVP process, dozens of user interviews, we noticed there was a lot of similarities between the sports bettors and the retail traders, as they both like to play an active role in managing their discretionary income. So we do have a small degree of virality built in from the beginning, but this can easily scale with that breakthrough exponential growth.
In terms of unit economics, we have 2 main channels of revenue. One is an order routing revenue that we've modeled at 19 cents per contract, and one is a commission that we've modeled at 75 cents, which is comparable to a TD Ameritrade, Fidelity, or Schwab. So per contract, we have 94 cents of revenue. But because these are option spreads, there's a 2 times multiplier. So per trade, we have $1.88 of trading revenue and only 18 cents of per trade costs, for a total gross profit of $1.70 or just over 90%. And because of this cost structure, we don't need hundreds of thousands of users to turn a profit. We need just 30,000 users to break even. We project hitting those 30,000 users in 2023, which is our second full year in operations. And you can see once we hit that critical mass, the revenue and EBITDA scale really nicely. You can see almost $130 million of top line revenue by 2025 projected into our model.
And we thought it'd be important to take a look at where we've been and also where we're headed. So in February, we closed our friends and family round. In March, we initiated app development. April was a big month for us. We filed our new member application with FINRA, debuted our alpha, conducted user testing and multiple rounds of feedback. We're also working with our CTO, Dennis Whalen. In August is the close of the current fundraise, and we'll be working with our user acquisition hire. In November is the anticipated FINRA approval and public launch. We've been able to forge all these strategic partnerships and best-in-class partnerships with the fixed amount that we raised from our friends and family round in compliance, clearing and custody, app development, design, and market data. Alec briefly mentioned his and my backgrounds, but we just wanted to highlight a couple members of our team. Dennis Whalen is our CTO, 25 years plus experience in app-based product development. Alex Wang is our director of marketing. She's been a brand strategy manager for Walmart and Procter & Gamble. And one of our strategic advisors, Justin Piles, 20 plus years as an equity derivative specialist, is the former risk management head for Peak6, which is Goldman Sachs derivatives trading arm.
For our current raise, we're targeting $750,000 at a $5 million pre-money valuation. We have a $500,000 minimum close on that, which we're excited to say we're very close to hitting that number in terms of firm commitments. We have a $1.25 million max for this round. This raise is going to provide us 12 months of operations from today, so likely 8 months of time in market. We're using those funds for trading and development costs, as well as starting to build out the optionality team. Thank you very much, and we'll start to take Q&A from now.
Thanks, Alec. AJ, you can kick it off.
Hey guys, amazing concept. So, firstly, you're just looking at 2 spread contracts, right? So you're going to do a bear put spread, a bull call spread, something like that. But you're not getting into the strategies that require 4 contracts to be in place, like an Orion Condor or a Butterfly or something like that. That's not on your radar right now.
So it's definitely on the radar, and that's exactly right. We're starting with those 2 contracts for launch because we wanted to be focused, and we didn't want to, have too expanded of an offering. But that is actually on our radar for kind of down the road. But that's exactly right. We have those 2 spreads for launch.
Wonderful. Now, most of the money that you're going to be raising right now is going to be for tech development. So as of today, you just have the FINRA approval. You do not have the tech in place, or do you have some tech in place?
So we actually have a full prototype built, which is a trading simulator, and we would estimate that we're about 2/3 of the way through our actual full go live product. And we're aiming for FINRA approval in November. So we think we have a really, really good start on the tech development build out.
Wonderful. Thank you. I'll release time if somebody else has questions, else I can keep asking you more.
Thanks, AJ.
What is the guarantee on the FINRA approval? How long does that, you mentioned that it's going to be in November, and then how does that affect what the platform that you're looking at? Do you have to make modifications on the platform to adhere to the regulation side? So that could actually come back and say, you need another couple of weeks for modifications and updates. Does any like that come back from that approval process?
No, so we filed our new member application in April, and that was deemed substantially complete in early May. And in that new member application, we gave kind of the gist of what the platform was doing. We gave them kind of everything that we had planned on doing. They had already okayed that. We have a demo with them in August where we'll actually walk through each part of the app. But there's no kind of like big surprise at the end where FINRA says you can't do this and we have to go back or get delayed months. That's already kind of been taken care of up front.
And then last question on the security side for your KYI, like your customer side of things, is there anything that has to be regulated on that side? What data you're capturing, and then what data goes back to the governing bodies, protecting all of the trades and investors?
Yeah, and so it's not data that we have to capture and send back to the governing bodies, but we have to make sure that we know kind of who our customers are, make sure that they're non-professionals and make sure that they're not on any banned kind of organization list. We have processes in place to do that. Apex has processes in place to do that. And both have been vetted out with FINRA. So we feel really good on the onboarding process.
Okay.
Thanks, Jeffrey. Olga?
Partially a few questions were covered. Could you tell us a bit more about the how your preferred option spread list looks like in reality? I am a trader. I worked in institutional asset management for multiple years, and I'm super curious on how it looks like in retail interface perspective. And what is exactly from gambling sports cards you are exploring to make it simpler?
Yeah, so I'll kind of let Adam take over for the latter part of that question. In terms of what the UI UX looks like, we wanted something very clean, very modern, with as much transparency and information up front, but also we want it to remain simple.
No, I meant a bit different. You are saying that you're providing some choice of preformed options with risk profile specified. What does it mean?
Oh, okay. So
maybe you have a screenshot, something to share, something to show how the actual screen of trading looks like.
Yeah, so we have a full demo built out. We have an app that maybe we can share offline and we can go through each screen and each mock-up. So we can definitely go through that. In terms of the risk of each trade, so we have the algorithm that creates 9 different trades per expiration per symbol. So for Apple, for next week's expiration, you'd have 9 different trades, and we rank the risk of each risk bucket relative to each other. So we have 3 in the low risk, 3 in the medium risk, and 3 in the high risk, and those are just based on the algorithm in relation to kind of those symbols buckets.
Okay, how does it manage risk choice decision making for a trader, especially young trader, starting trader?
Yeah, so really we're not managing their risk, but really what the spreads are there to do is to highlight kind of the differences between an at the money spread or the difference between 5 strikes out of the money. It gives estimated win probability, it gives the maximum loss, the maximum profit. But it's really just an informative. It's not meant to give what we think the risk is in terms of whether they should put on the trade or not.
So while you're trying to attract inexperienced traders into options, the most high risky trading ever, you have just some buckets, like different way of showcasing assets to trade. I'm not sure I understand. Yeah,
we put the spreads together and then we rank them against kind of all the spreads that we put together, and we let them know, this has a 60% estimated win probability. And then we give them what the potential reward is and what the potential loss is. So they know up front, I can put $10 into this and my maximum gain is $40. My maximum loss is $10. And there's roughly a 25% chance that this will finish in the money or profitable. And so we give all those metrics up front so that there's no confusion about what their position might do.
And Olga, we also don't offer any margin. So the maximum loss of the trade is equal to the amount that you buy the trade for. And we're not looking at, tens of thousands or $20,000 in optionality wallets. We're centered around $1,000 to $1,500 in the typical funding account for an optionality wallet. So you're looking at discretionary income. You're not looking at someone's 401k or Roth IRA in terms of investment.
Okay, no problem. Still, it's a question of perception and what are you trying to achieve? But if you are given some probabilities, would it be perceived as incorrect investment advice?
No, so we've already cleared that with 2 different regulatory agencies. And because we're doing it off the D2 term of the Black-Scholes model, it's a simple mathematical formula. We're not giving advice. We're not saying we think that this is going to finish in the money at some percent. It's all based on a formula. And so because it's...
But do retail traders who've never traded options before know what it means?
Yep.
I think it's just the problem is what you are describing. You think right now you're covered from legal sides. 33andMe faced exactly the same problem. They thought they can tell people that there is certain probability to develop say, cancer within the next 20 years in time due to a specific genetic setup and people not aware of the science, we're just reading it as, oh my God, I'm going to have cancer in the next year. And they got a bunch of legal suits. So it's actually a valid question, even if FDA or FINRA and the option committee approved for you this framework, you might in the future encounter this type of problem because retail traders will perceive it as advice. That's what I'm saying.
Okay, we definitely appreciate the feedback, but we've gotten great feedback on some of our tests that people really appreciated those metrics. But yeah,
sure.
That's a great point to think about.
And
Sure.
I think that's pretty true for most fintech corporations, right? You're going to have one X amount of budget allocated to your retail customers, possibly suing you. And today, I mean, I don't know the stats; these guys would know it better. But I think 96 or 98% of all option trade end up in people losing the money. So options trading is risky, but sometimes helps. You can balance your portfolio, you can hedge your risks, stuff like that. If I have 1 more minute, I have one more question for you.
30
so you
seconds.
guys have done your TAM research, right? What do you think? Who are your kind of major competitors, and what kind of volumes are you looking at gathering? What's your excitement about the opportunity?
Yeah, Adam, do you kind of want to get into the different markets that we're going to get into and kind of where we see the volume shaking out?
I'm sorry, my computer kind of went static in the beginning of the question. If you could answer it, Al. Sorry, I missed the beginning of it.
Yeah, of course. So in terms of the different markets, we kind of see this being broken up in between retail traders, so people who have kind of dabbled in options trading but aren't super confident about it yet, and then people on the sports betting side where we see the DraftKings and FanDuel who they do this kind of trading on the sports side, but there's a huge parallel on the option side, and so we really see those kind of parallel markets as being two sides of the demographic that we're going to initially go after, and like we mentioned.
And who are your main competitors?
Main competitors, even though they're not doing anything like it, we do see Robinhood as a competitor. We've seen Gatsby who has come in and they're trying to make options trading easier, although we see Gatsby as being kind of the same technology and just a slightly different wrapper. And then there's Zingaroo, who hasn't even launched yet, but they're kind of doing the social side of what we're doing. So there's a few competitors who are doing parts of what we're doing, but nobody's really come close to doing the preformed option spreads the way we are.
All right. Thank you.
Thanks, everybody.